Hi class. Today we're going to be working on chapter 20, problem 3B. So I'm going to bring up Cengage for you. And well, let me try this again. Share the screen. Hold on just a second till I can figure out what I have clicked on wrong here. Okay, you should be able to see problem 20-3B now. And what we're going to be doing today is a cost of production report. And a cost of production report would be prepared by managers. A cost of production report would be prepared for each department in our company. And so we're going to be the Dover Chemical Company, and we're going to manufacture chemicals by a series of 3 processes. All the materials are going to be introduced in the distilling department. And from the distilling department, the materials are going to pass through the reaction and the filling departments. So there are 3 departments in this company. And all the materials are going to start in distilling. Once distilling is finished with their process, they're going to send it to the reaction department. And then reaction department, when they're through with their materials, they're going to send it to the filling department. And then when the filling department is through with the materials, they're going to send those to finished goods. So again, we're a chemical company, and we're going to be sending materials through these departments. And what we're going to be doing is preparing a cost of production report for the filling department. And so if the materials enter the process in distilling, and then from distilling, they're going to come into the filling department. So we're going to be the filling department. And what we're going to be looking at is what is happening during the month of January. And the first thing that they tell us is that the balance in the work in process filling department was 3,400 units that came from last period. So in in December, we brought forward into January 3,400 units. This beginning work in process, of course, is the ending work in process for the last period that's just brought forward. What they're telling you here is that of the 3,400 units, 60% of those are completed with respect to conversion. Do you notice down here they've broken down the total balance in the beginning inventory by what was materials and by what is conversion. And because the materials are added at the beginning of the process, all of these materials have already been added to the 3,400 units that came from last month's ending inventory. So they're telling you here that they had 3,400 units in work in process, and that the materials that they calculated last month, the equivalent units for the materials last month was $9.58. So if you multiply 3,400 times 958, you can see where they get this 32,572. The conversion portion of the beginning work in process units was 60% complete, because all of the materials were added last period at the beginning of the process, 100% of the materials were added last period for this beginning inventory. We just hadn't finished it with respect to conversion cost. What you have to remember, class, is that the manufacturing costs are going to be materials, labor, and overhead. Conversion costs are your labor and your overhead combined together. So last period, our ending inventory had a cost associated with it, a total cost of $40,528. Of that total cost, $32,572 was for materials, and $7,956 was for conversion cost. So materials plus conversion are the total cost of the beginning inventory. This beginning inventory came from last period's ending inventory. The beginning inventory is 60% complete last period. So this period, we're going to have to work on it for 40%. We're going to have to add conversion cost of 40% to this beginning inventory cost to be able to finish our beginning inventory units. The following costs were also charged to the work in process filling department during this period of time, which was during January. They had some materials that were transferred in from the reaction department. They have some direct labor where they were actually working on the goods that are in process. And they had some factory overhead that was applied to the work in process. And then they tell you that during January, 53,000 units of specialty chemicals were completed. That's an important piece of information here that they give you. The work in process in the filling department on January 31st, in other words, the ending inventory on January 31st, is 2,700 units. Out of the 2,700 units, 30% of those units were completed with respect to conversion, because 100% of the materials were added to the ending inventory during this period. 30% remain uncompleted because of conversion cost, which consists of labor and your overhead. Okay, so that was the given information that they gave to you about this particular department. What we're going to be doing is completing a cost of production report for the filling department. And this is going to be for the month ended January 31st. We're going to start with the unit information. In a cost of production report, the top part just has to do with unit information. We divide the cost of production report into unit information and cost information. Your cost information is coming next, but we have to look at the unit information first to be able to determine our cost information that would go last. So we're starting with unit information only. And what they wanted you to look at is the units that were charged to production, the inventory in process on January 1st is your beginning inventory. The beginning inventory units were 3,400 total units that were your beginning inventory units. So we're going to start with 3,400, our beginning inventory units. Then what we're going to look at is what we have received into the filling department. We received some materials, we received some units from the reaction department that we need to work on in our filling department. The amount of units that we received from the reaction department were 52,300. So what we received from the reaction department is 52,300. Again, that was the given information that they gave you right here. So the total units that we account for in the filling department for the month of January would be the beginning inventory plus what you received in from reaction. So put 3,400 units in, and we're going to add to that 52,300. And that's going to give us a total amount of 55,700. So this is the first part of the unit information that they wanted you to determine. These are your whole units here. And what we're doing next is we're breaking down those whole units into some separate parts. We're really reconciling these whole units with this part down here. So if you want to, what I would suggest you do is work on the whole column, whole units column first, and then we'll talk about doing equivalent units. So we're going to start with our inventory and process at January 1st. Our whole units were 3,400 units. We just copy that down into that block there. 3,400 units was our whole units that were in beginning inventory. We don't know what we started and completed in January. We're going to have to find it. But they do give us information about what was transferred to finished goods inventory. But I'm going to hold off on that for just a minute, because there's some other things that they've given you too. So just fill in the information that was given or that you know about first in the whole units. And then you can work backwards to find the missing amounts. So what we do know about our whole units is that we had beginning inventory units of 3,400 units. That was given to us. We also know by our calculations for the unit information that the total units that we have to account for are 55,700. Notice I'm going to put in those total units that I have to account for. I'm going to need to also assign those units cost. So 55,700, I'm just going to plug in right here. Then I'm going to look at the information that was given to me. You can see that in the information, they told you that during January, 53,000 units were completed. The work in process filling department at the end of the period was 2,700 units. So 2,700 units, I'm going to plug in here. And then I can determine what I have transferred to my finished goods inventory by taking the total units to be assigned cost and subtracting the ending inventory units from that. That will tell me what I transferred to my finished goods from this department. So your 55,700 is going to be, you're going to subtract 2,700 from that amount, and that will leave you with 53,000 that you transferred to finished goods. It also told you up here that 53,000 was transferred, but you can back into that just to be able to check your figures. Now, what we did not know is what we started and completed, but you can now find that started and completed units by taking what you have transferred and deducting the beginning inventory units from that. So what you transferred out minus your beginning inventory will tell you the units that you both started and finished during this period of time. So if I subtract 3,400 beginning inventory units from what I had transferred out, it's going to give me 49,600 units. And it'll be a good idea now to check your work. You can do this by adding your beginning inventory units to your started and completed. That should give you 53,000. Take your 53,000, add your ending inventory units, and that would give you the total units to be assigned cost. It's a good idea now to check your work to make sure that your math is correct. All right, now I want you to listen carefully here because students get confused about equivalent units. So I'm going to start with my beginning inventory units. Those were 3,400. Remember that your beginning inventory units already have all of your materials in there. All the materials were added last month. In other words, they have 100% of the materials that were added last month. But this is January, and January is what we want to record for the equivalent units. If all the materials were added last month, then 0 materials will be entered this month. Our equivalent units is the portion of the units that could have been finished during this period of time. We have broken down the equivalent units into direct materials that will make up the equivalent units and conversion that will make up the equivalent units. Our direct materials, our beginning inventory, we had 3,400 whole units. All 3,400 units were started last period. So they have all the direct materials in the last period. We don't need to add any more this period. So there's 0 materials that are going to be added to our beginning inventory units because all of the materials had been added during the last period of time. Our conversion cost, which are your labor and your overhead, were not all finished last period. So when you look for your conversion equivalent units for your beginning inventory, you need to look back at the given information to see how much of those units were converted last period. That was our beginning inventory. Our beginning inventory units were converted 60% last period. So we need to finish these beginning inventory units by adding 40% to this period. So what we're going to do is we're going to take our beginning inventory units, which was 3,400 units, and I'm going to multiply that by 40%, the percent that I need to finish this period with respect to conversion. So 3,400 units were started last period. 60% were finished last period. So this period I have to multiply 3,400 units times 40% that I need to finish for conversion units. So 1,360 are the units that I need to finish with respect to conversion of our beginning inventory units. 3,400 times 40% is how I got the 1,360. Of your started and completed units, I want you to think about what this says that you did. Your whole units was 49,600. You both started those units and you finished them in January. So all of these whole units have all of the materials added this period. 100% of our materials were added to those units that we started and finished. So we're going to put in 49,600 as my started and completed units with respect to materials. I'm going to move to my conversion. If I started 49,600 units and I completed 49,600 units, 100% have been completed with respect to my conversion cost. So 49,600 is going to be started and finished with respect to conversion of our started and completed units. 100% has been added or converted of the started and completed units. I want you to notice that there's a pattern here. Notice your started and completed units, your whole units, are the same for materials and conversion. That's because we completed 100% of these started and completed units. They were 100% complete with respect to materials, and they are 100% complete with respect to conversion. And like we did a while ago, your beginning inventory units would be added to your started and completed units. For direct materials, you didn't have any beginning inventory. but you did have what you added and started and completed during this period of time. So the total amount that I will transfer of my direct materials equivalent units will be 49,600. And of course, when you add your beginning inventory and this together, it will still give you 49,600. For your conversion, we're going to add our materials. Excuse me, that's not correct. For our conversion, we're going to add beginning inventory units that we need to finish this period, which were 40% of the 3,400. This 1,360 is going to be added to our started and completed units, and that will tell us what we transferred. So 50,960 is your transferred to finished goods in January of your conversion equivalent units. I simply added these two together. And you can do that all the way across. To find the direct materials that were added to your beginning to your ending inventory units, all 100% would have all the materials in them. So of our ending inventory units, all 100% of these units have materials in them. For our conversion, we don't have our ending inventory finished. Remember that our instructions told us that our ending inventory was 30% complete with respect to conversion. Now I want you to watch what I'm doing here. I'm going to take my entire my entire ending inventory units, which was 2,700 units, and I'm going to multiply my ending inventory by 30% that was completed with respect to conversion during this period of time. That's going to give me 810 units that I have left of my ending inventory that are converted during January. And again, I got that by taking 2,700 and multiplying it by 30% that were completed with respect to our conversion this period of time. And then to find the total units to be assigned cost, you're going to add your transferred units plus your ending inventory units, and that would be the entire amount of units that is considered to be equivalent units for materials. So 49,600. This right here is going to be added to 2,700 units. And my total direct materials equivalent units is 52,300. The next thing I need to find is my total equivalent units for conversion. I'm going to add my transferred units plus my ending inventory units to get the total units to be assigned cost for conversion equivalent units. So 50,960 plus 810 units. These two combined is going to give you 52,580. Now, it's a really good idea to check your work to make sure that your equivalent units are correct. You cannot go any further with this problem until all of this is finished. So it looks like I added wrong here. So let's put in the correct amount. 50,960 plus 810 is 51,770. And I check my work again, and this time I added it right. All right, now in review, this is the first part of the cost of production report. It's only dealing with units in the first part. The first part of the unit calculation here is to find the total units to be assigned cost. That was your beginning inventory units plus what you received from the reaction department. This information was given. Notice there's a double rule underneath this. What that's going to tell you is that this needs to be reconciled with this. And so 55,700 should be the amount that you come up with for your total units to be assigned cost. What we did is we broke these units down into some extra steps. We knew what the beginning inventory units were. That was what was brought forward from last period. We did not know what we had started and completed. You have to find what is started and completed as far as units are concerned for this month. To do that, we need to know what was transferred. This transferred amount was given to you, and you will subtract the beginning inventory units that were given to come up with started and completed units. The ending inventory was also given to you. When you combine what you transferred with your ending inventory, you're going to add these two together. It'll give you the total units to be assigned cost, which has to reconcile back to this number right here. So there's a systems of checks and balances with this cost of production report. You have to determine the equivalent units for materials and conversion separately. The materials equivalent units is going to be plugged into the total equivalent units that you are determining in the next section. So this has to be right before you move forward. Getting back to the cost information that we're going to start with. Our total cost for January in the filling department for materials, what they want there is just the materials that you started during this period of time, which was 496,850. So 496,850 is what you're going to put in for your total direct materials cost for the month of January. My conversion costs are going to be my direct labor and my factory overhead combined. So 101,560 101,560. That was my direct labor, plus my factory overhead is my conversion cost that we incurred during the month of January. So my direct labor is going to be added to my factory overhead. And that's going to give you total conversion cost of 196,726. I'm going to check my work just to make sure that I added correctly. We don't want to go any further if these numbers are wrong here. They are correct. So I'm going to move to the next thing they tell us to put here. Total equivalent units. Our total equivalent units for our materials is 52,300. We calculated that earlier, and that figure right there comes from this figure right here. Our total equivalent units for conversion is 51,770. And it comes from right here. What you're going to do is you're going to divide your total equivalent units into the total cost of your materials first to get the cost per equivalent unit for materials. So 496,850 is going to be divided by 53,200 units. And that will give you the materials cost per equivalent unit. And I see that I did something wrong here, class. You see that 53,200 should be 52,300. I had a transposition error here, so that's going to make this amount wrong. So let me fix that. $52,300 should go there. Okay, again, I'm going to take my materials cost, $496,850, and I'm going to divide that by 52,300, and that's going to give me $9.50 for my equivalent units for direct materials. This is my cost per equivalent unit for direct materials is $9.50. To find your equivalent units for conversion cost, I'm going to take my total conversion cost for the month, which was $196,726. And I'm going to divide that by 51,770. That will give me $3.80 as my conversion cost per equivalent unit. And you definitely need to check your work here, because if these equivalent unit costs are wrong, the cost per equivalent unit are wrong, then this is going to come up wrong down here. What I'm going to do is I'm going to start with my beginning inventory cost. Remember, the beginning inventory cost was given to you. The beginning inventory cost is $40,528. The costs that I have incurred in January are going to be all of these costs combined. So our direct materials cost that we received from reaction department was $496,850. I'm going to add to that my direct labor of $101,560. And I'm going to add to that my factory overhead, which was $95,166. My total cost that I've incurred during this period is $693,576. I'm going to combine these costs with my beginning inventory cost, which were $40,528, and that will give me my total cost that I incurred this month. And I would definitely check your work to make sure your math is correct. This part right here, this top part right here, is going to be reconciled with this part here. Remember how we did the same thing for our units? This part here is reconciled, or it's broken down into these individual parts. So this information here is going to be broken down and looked at separately so that we can analyze the cost for this department. So we're going to start with our beginning inventory cost that was given to us. And the amount of that was $40,528. That was our beginning inventory cost. Now I want you to think about what's going on here. For our beginning inventory, remember we started at last period and all the materials were added last period. So during this period, we would have zero cost that we incur for our beginning inventory units because all the materials were added last period. They're in this beginning balance that we brought forward. They're already there. What we do need to figure out is how much we have left to finish the beginning inventory units. And obviously we're in the conversion column here. So our beginning inventory units were 100% completed for materials last period. But this period, we need to finish those beginning inventory units with respect to conversion. So I have to refer back, I want you to watch this, to my beginning inventory units that we were completing this period of time, which was 1360. That came from 3,400 whole beginning inventory units times 40% that would need to be finished this period of time. So I'm going to start with this 1360 units, and I'm going to multiply that by my conversion equivalent unit cost per equivalent unit. Our cost per equivalent unit for conversion is $3.80. I'm going to multiply that by 1,360 units, and that will give me the cost that I need to finish my beginning inventory. Again, I'm going to pick up 1,360 units. I'm going to multiply it by the conversion equivalent unit per unit cost, which was $3.80. So this is multiplied by $3.80. And that will give you $5,168 that we needed to finish of our beginning inventory with respect to conversion. This month, we completed all of our beginning inventory. So we brought forward from last month, $40,528. We're going to add to it what we needed to finish the beginning inventory units, which is $5,168. So I'm going to combine that with the 40 40,528. And that will give me a total of 45,696. And that's your total beginning inventory cost. So last month it was this. We had to add this to it to finish it this month. And this is the total amount of the cost of the beginning inventory. And I've got that in the wrong blank here, class. Bear with me as I muddle through this. Now, this is your total cost of your beginning inventory. 40,528 was brought forward from last month. We finished the beginning inventory units with respect to conversion, and it cost us 5,168 to do that. We didn't need to add any beginning materials to our beginning inventory units because they were already added last period. So these two combined together are 5,168, which added with this will give you the total cost of the beginning inventory for this month. Check your work. Now I'm ready to find the cost of my started and completed units. How many started and completed units did I have for materials? 49,600. 49,600 will be multiplied by the cost per equivalent unit for materials of $9.50. So I'm going to take 49,600 of my started and completed units. I'm going to multiply this by my cost per equivalent unit for materials, which is $9.50. That will give you 471,200. That was your cost of your materials for your started and completed units. The next thing we need to find is my conversion cost for my started and completed units. My started and completed units for conversion was 49,600. I'm going to take that 49,600 and I'm going to multiply that by $3.80. That is my equivalent unit, cost per equivalent unit for conversion. So $49.60 times $3.80 is going to give you 188,480. And I'm going to combine this with my materials cost, and that will give me the total cost of my started and completed units. it's a good idea to check your math here. And the math is good. So what I know right now is the cost of my beginning inventory and the cost of my started and completed units. If you add beginning inventory cost and started and completed cost together, it will give you what you've transferred. So I'm going to add my beginning inventory to my started and completed. And that's going to give me what I transferred, which is $705,376. I would check my work here. This amount is transferred to finished goods. We're going to end up taking it out of our work in process account for the finishing department, and we're going to transfer it to the finished goods inventory account. So this is an important piece of the information here. The last thing that we need to determine in the cost of production report is the cost of our ending inventory. So we're going to start with the ending inventory units for materials that was from this period of time. Now look where I'm getting these ending inventory units right here. 2,700 units were 100% complete with respect to materials. So all 2,700 units of the ending inventory is going to be multiplied by the materials cost per equivalent unit of $9.50. So 2,700 of your materials that went into your ending inventory that were 100% complete with respect to materials, all 2,700 units have to be multiplied by $9.50. That will give you the materials cost of the ending inventory, which is $243,675. The next part that they want you to calculate is the conversion cost of your ending inventory. And your conversion cost of your ending inventory, remember this is your ending inventory units, you only finished part of those with respect to this month. The part that was finished for conversion of your ending inventory units is 810 units. So in the calculator, you're going to put 810 units, and you're going to multiply this 810 units times the cost per equivalent unit for conversion, which was $3.80. Our ending inventory conversion cost is $3,078. So the total cost of my ending inventory is my materials cost plus my conversion cost. And I would check my work there. And obviously I got it wrong. So I need to go back and recalculate the materials portion of this. So this will be correct. All right, and this is the way I got to do this. Let me pull back up my calculator and clear it out. We're going to start with our ending inventory units for materials. The materials column here, ending inventory units, was 2,700 units. So 2,700 units has to be multiplied by the equivalent unit cost of the materials, which is $9.50. And that'll give you 25,650. And this 25,650 would be added to the conversion for the ending inventory. The conversion costs were $3,078. And the ending inventory cost is $28,728. All right. The ending amount of inventory is what you would have left over in your work in process account for your filling department. That would be in your ledger account. So you'd have a way to check this figure here. And then the final step is to add your ending inventory cost to what you transferred. And the two of these added together have to be equal to this 734,104. Okay, so that is your cost of production report completed for you. And so you need to know how to calculate the steps of the cost of production report. So this would be something very important for you to look over and practice. Class practice makes perfect with this cost of production report. Just keep trying it and keep doing it over and over again until you see a pattern, until you understand what the information is trying to say to you. What we're doing is we're calculating a breakdown of the cost in the work in process department for this month. And this is our breakdown in our cost here. But we have ways to reconcile this. So it's important to understand the process that they, or how they prepared the cost of production report. And management will use this report to help them make decisions about how to operate their company in the future. In the second part of this problem, they're going to ask you to journalize the entries for the costs that are going to be transferred from the reaction department to the filling department, and the costs that will be transferred from the filling department to the finished goods department. And what I want to do is I want to share with you an Excel spreadsheet that I made up for the second part here, so you'll understand how to do these journal entries. A lot of times students have questions about these journal entries. So what I'm going to do is I'm going to stop sharing my screen for just a moment, and I'm going to pull up the Excel that I have got recorded with this. Okay, this won't give me a fit here. There we go. I got to click on the right thing. And let me see if I can find what I was working on. This one right here is in Excel. You should be able to see my Excel spreadsheet that I've created for you. Notice I put in T accounts what's happening in this company. This company had a reaction department, and what they did is they transferred materials to our filling department. We were the filling department, and we did the cost of production report for the filling department. The beginning balance was given to us. It came from last period's ending inventory that was brought forward. So these T accounts represent ledger accounts. We had a beginning balance, and this amount was given to us. They also told us that we received from the reaction department some materials to work with during the month of January. Those materials that we received were $496,850. That was a given amount. They also told us that we incurred some direct labor and we incurred some factory overhead. What they did not tell us is what we transferred to finished goods, but we found this on the cost of production report. So in your cost section where we have transferred to finished goods, I got that from the cost of production report. This transferred finished goods, I'm going to send from the work in process department. I'm going to transfer it to my finished goods inventory account, which is another ledger account there. Once I know what I've transferred, the difference between the total cost that I incurred for this month minus what I transferred to finished goods will leave me with my ending inventory balance. And you can check this balance with your cost of production report. In part 2, they just wanted us to prepare a journal entry to show that we have received some materials from the reaction department. So we debited work in process, the filling department, for what we received from the reaction department. So we debited the work in process filling department for $496,850. we would have credited our work in process reaction department, because what was finished in the reaction department is transferred to the filling department where it's further worked on. And when we get finished this month, we're going to transfer our cost out of the filling department into finished goods. It's important to understand the flow of cost through the ledger accounts. My finished goods was debited for $705,376. My work in process was credited for $705,376. So we received some materials into the filling department from the reaction department. We debited those to the filling department. We credited the reaction department for the amount of materials that we received in. We transferred out of our work in process by crediting it and put it into our finished goods by debiting it. That's this transaction right here. We have actually finished $705,376 of goods. And so that's how you do the journal entry. So I'm going to go back to Cengage. And we're going to finish this. This was what I had put on the Excel spreadsheet that I just showed to you. And what we're doing is we're receiving into the work in process filling department the amount that was received was $496,850. We're going to credit the work in process reaction department because that's where we got the materials from. And the second part was we're transferring the cost from filling to finished goods. So we're going to debit finished goods for the transferred amount. Do you see where the transferred amount is in this cost of production report? It's $705,376. We will credit the work in process filling department for $705,376. And the very last part of this problem wants you to determine whether there was an increase or a decrease in the cost per equivalent unit from December to January for both the direct materials and the conversion cost. So the change in direct materials cost per equivalent unit. Last period, you worked on beginning inventory units. Last period, your ending inventory was 3,400 units that were 60% completed. Direct materials cost. Right here, they've given you the amount for last month. The amount for last month, the cost per equivalent unit was $9.58 last month. That was given right here. You're going to compare that with your materials equivalent units in your cost of production report that you prepared this month for January. So hold this thought in your head. $9.58 was last period. This period is $9.50. It went down by 8 cents, or it was decreased by 8 cents. So we would choose decrease, and 8 cents would go here. The second part of this is asking you for the change in conversion cost per equivalent unit. Last month's conversion cost per equivalent month per equivalent unit was given. Last month, the conversion equivalent unit cost was $3.90. You're going to compare $3.90 with what happened this month. This month, it was $3.80. There is a 10-cent decrease from last month to this month. So it's a decrease of 10 cents. And we're through with that part. And we have one more part that we have to look at. The cost of production report may be used for the basis of allocating product costs between work in process and finished goods. The report can also be used to control costs by holding each department head responsible for the units entering production and the cost incurred in the department. Any differences in unit product costs from one month to the other, such as those in Part 3, can be studied carefully, and any significant differences should be investigated. So they use this information right here to help them to make decisions about how to operate their business. And that's all of this particular problem. So we'll see you again next time. Bye-bye.